Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I said 13 weeks ago how the two recent bearish patterns in this market, that is the two bearish shift pitchforks, the smaller August 2023 base one and the larger mid-June to early August 2023 base one, how their very active separation was going to rip each pattern to pieces and that neither would come away from the action unscathed. Well, it happened in late October last year with prices exiting both pitchforks and the smaller August-based pitchfork no longer involved with the market. Interestingly, after the breakaways, the market started initially tracking down the outside and below of the broken lower tine, currently at 16,875. A procedure I had seen elsewhere in other markets and actually in other pitchforks. There had been some deviations lower to make a small sideways triangle, for example, but overall prices had tracked sideways to just under this broken lower tine. The market even made a weekly key reversal up 2 weeks ago, trying to reach up and touch the broken lower tine, though unsuccessfully. 8 weeks ago I said about the sideways movement of the market, and I quote, I suspect this seeming sideways movement may not last, as coming in from above we have the declining short-medium moving average, that's currently at 16,475, which may well apply pressure on prices and cause an action or a reaction, end of quote. Well, 2 weeks ago, when trying to build a weekly key reversal up, the market fiddled with the short-medium moving average and we had a reaction. The market made a reactionary move back down. So, just think if this is what just the declining short-medium moving average can do, imagine what the next more powerful declining moving average might achieve. We now have the medium moving average currently at 17,365, dropping down towards the frame. The only issue is the market is creating some support just ahead of the 2021 low at 15,665, and I'm wondering if this will be enough to hold prices higher as that medium moving average moves towards the market. LME 3-month zinc. The big picture here is much the same as it was last year, though this may not last that much longer. You see, we have two competing shift pitchforks here. We have a late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market's currently between the middle tine above, currently at 25.32, for a whole host of moving averages clustered around and just underneath it, between 24.75 to 25.17. And then we have the lower tine below, currently at 23.67, which is approaching from below the very interesting support at 23.97. That lower tine is approaching it from below. Now, I'll speak more on this support later on. This segues into the second shift pitchfork, the larger, very large, May to August 2022. That's right, a pattern that is well over a year old, the May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one, we are between the upper tine above, currently at 26.01, and the middle tine below, currently 20.66, and that's actually heading off the bottom of my daily chart. Now, this is the rub. The upper tine of the larger purple highlighted bearish shift pitchfork is now well within the smaller bright red bullish pitchfork. Indeed, they cross over on the unusual 29th of February this year. Yes, it's a leap year, though I anticipate we'll likely have a move sooner than that. I would now like to emphasize once again how this bearish shift pitchfork, which is now well over a year old, I wish to emphasize how it is still working in the overall bigger picture to drive prices lower despite moves upwards during 2023, including the monthly key reversal up we saw in December last year. One way or another, the tines are going to be tested here, and soon. The question is whether the bright red bullish shift pitchfork will give way and we see prices move down through the lower tine, currently at 23.67, or will the bigger purple upper tine give way and we have a whole new potential outlook on this market. As I said earlier, and also last week. We should know by the end of February, probably sooner. I'd only add one further postscript, and that is, after studying this daily chart further, I'm wondering whether we are in the last stages of forming a possible September 2023 to date very large triple top. The neckline for this pattern is at the previously mentioned very interesting congestion at 23.97, which is seeing the bright red lower tine rapidly approaching, as I've mentioned earlier on, from below. Hence, I will closely be appreciating what happens down at the 2400 level, should we manage to get down there. LME 3-month tin. There are 3, maybe 4 major patterns here visible on this daily chart. We have the late July to start of October 2023 bearish halfway hesitation. However, this pattern did not live up to its fullest potential as prices ran into 2 significant supports that stopped the decline. The first support was, and still is, and it was and is an obvious one as well, it is part of a series of congestion bands below, specifically between 23,850 to 24,155, and then between 22,895 to 23,555. I've spoken about these congestion bands numerous times before, so they should be familiar. Then the second pattern utilizes the same unfulfilled bearish halfway hesitation as part of its structure, and that is the June to October 2023 head and shoulders pattern. Now, it's by no means a great looking pattern, with the second shoulder having quite an extension on it, or the previously mentioned bearish halfway hesitation, in other words. However, it had been good at defining the lower end of recent market action with its neckline currently at 21,655. Plus, there is an additional consideration to take into account here. It is a September to date downtrend currently at 23,920, which is highlighted in dark blue on my daily chart. If we take this into account with the neckline, then the action since the late summertime last year becomes a bear channel, currently 21,655 to 23,920. The recent action has seen the market push back up from the congestion bands below and over all the moving averages 2 weeks ago, up to the highs not seen since early August last year. This emergence led me to the final, but only just possible pattern here. A mid-October 2023 to late January 2024 inverted head and shoulders pattern with an unhighlighted neckline currently at 26,215. As I said last week, and I quote, "You see, I'm not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information available, and whilst it looks okay-ish, I am still not happy about it, hence the moniker of a possible reverse head and shoulders pattern." End of quote. Now, I even went as far last week as laying out some potentials above, not targets, no, I didn't go that far, but potentials up to the 28,100 and 28,895 levels. Now, I was right not to be happy about them, and the reverse head and shoulder pattern being a head and shoulders bottom of some form, not just yet, as prices last week dropped down through all the moving averages until yesterday closed just under the combination of the medium moving average currently at 24,975, the short medium moving average currently 24,970, and the 50% Fibonacci line of the October 2022 to February 2023 move at 25,020. Today there has been a recovery up to the 2013 high at 25,250, but I am very cautious about the sustainability of any recovery. We still have the flatlining long moving average overhead currently at 25,725. However much the market sold down through it last week, we still have that flatlining long moving average overhead. The only new feature I would like to highlight, and it did help in also halting the drop last week, is the new late November 2023 to date uptrend, highlighted in bright red on my daily chart. And that's actually currently, well, it's in the mix amongst the market at the moment at around about 25,000 level. I would suggest keeping a close eye on that bright red uptrend on any moves the market makes towards and around it.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.